Good afternoon, everybody. Welcome to our YouTube channel, Fast CPA and Consultants. I'd like to introduce our CPA, Fulton Abraham Sanchez. Welcome back, Fulton.
Hi, Sarah. Thank you.
If you're visiting us for the first time, a few months, we started this series called Tax Talks, where you send us your questions about tax. So this week's topic is accounting for hedge funds. So are we ready to begin?
Yes.
First question we have, what is a CPA for hedge funds?
A CPA for hedge funds is an accountant that specializes in the accounting and the taxation for hedge funds. Hedge funds are specific companies or partnerships that that like to invest in a particular area. No, closer. I am.
This meeting is being recorded.
A CPA for hedge funds is an accountant that specializes in advising and processing the accounting and taxation for hedge funds. Hedge funds are companies or partnerships that dedicate their funds to bet against trends in the economy. Hedge funds could be for different types of sectors in the economy. In the health industry, it could be in the real estate, it could be in pharmaceutical sectors, could be in startups. It all depends of the let's say the philosophy or the activity of the hedge fund, how the hedge fund has been organized with the objective of investing in a particular sector of the economy, and the objective is maximizing the profitability of the fund in that sector.
Understood. The second question, how do accountants manage for hedge funds?
Hedge fund accounting is a lot sophisticated. There is, for example, the accountant, there is, similar to our transaction, there is the accounting for all the funds that are invested and also the trading of those funds. Just so an example, there are 2, 3, 4, 5 people who pull their money and they decide to form a fund. This fund is going to be a hedge because it's going to bet in the stock market. It's going to bet against specific trends that are the philosophy, are the nature of the fund when the fund was created, when these 5 people came together and they created this fund. So that's the objective, the investment criteria of the fund, to hedge, to invest and to hedge against specific trends in the economy in a particular sector. When that is given, then there is could be a lot of activity in the stock market, and this activity is given in the different statements, stock investments or statements that the trading houses will give to the company that fund, to the hedge fund. So there is a process of reconciliation between the transactions that happen with the accounts of all these different trading houses and the bank statements that are from the company itself. So this is when we come and do the matching between the trading. See, for example, there are 10, 11, 12 times when the money came from the bank accounts of the hedge fund and went to the trading accounts with the objective of buying whatever the buying criteria of share, or betting in derivatives or in currencies. It all depends of as I said before, it all depends of the structure of the fund and how the investment philosophy or investment criteria of the hedge fund is. So we come and get this reconciliation and find that the transaction between the money that has been given to the trading houses and the activity of the trading houses matches with the bank account transactions that we have. And this is the basis for the managing of the accounting transactions with the objective of creating credible financial statements, and these financial statements being used at the end of the year for the production of the tax return. And this is where it's critical. The tax return is going to produce a report with the summary of income for each of the partners or each of the members of the hedge fund. This is why all this process is critical, because you start with the pulling of the money into a bank account or several bank accounts. These accounts transfer the money into the bank account of the trading houses, and the trading houses open an account for the hedge fund, and the transactions and the trading start, whatever the trading criteria is for these funds. So this trading at the end of the month are producing a statement that we could say is a bank investment statement, different from a bank statement. A bank investment statement is a trading of stocks, and this is where we come up and do the reconciliation. With this reconciliation correctly stated, and then this given month to month or quarterly or at the end of the year, we will be able, as accountants, will be able to produce a clean tax return that will reflect all the activity from the hedge fund or for the hedge fund in the trading activity for the hedge fund, and then assigning correctly the transactions and giving to each of the partners and a clear report of those transactions at the end of the year, so they can file their taxes at the end of the year as well.
Understood. Third question, what is hedge funds bookkeeping?
Fund head bookkeeping is strictly the activity of classification of the books. That is, as well as bookkeeping is the keeping of the books of the all the bank transactions, put them into the financial statements and producing the financial statement. That will be bookkeeping only. It's the keeping of the books. So every transaction that we have either in the bank statements or in the bank investment statement, reconcile them and putting those transactions into the books of the company and producing the financial statements at the end of each month, at the end of the year. That will be bookkeeping. It's only the keeping of the books for the hedge funds.
Understood. And our last question, what are the benefits of a CPA specializing in hedge funds?
The benefit is the ability to advise to the partners of the classification and the minimization of opportunities to minimize taxes at the end of the year. As transactions, this is similar to another video that we were doing is, hedge fund transactions are mostly short term because this is where the trading goes every day or every week. There are transactions every week. So these transactions need to be classified correctly as short-term transactions because the tax rate for these short-term transactions is higher or is different from transactions that are classified as a long-term transactions over 1 year. So the benefit of CPA specializing in hedge fund is that he or she will be able to produce correctly stated financial statements with the first reconciling the stock investments with the bank statements for the amount that have been invested, and then at the end of the year producing financial statements that correctly state, correctly reflect the amount that corresponds to each one of the partners for their reporting at the end of the year.
Got it. So that was our last question for today. Thank you, Fulton, for your time and also information. If you have any more questions, just send them to our email or social media. We have a Facebook private group. We'll put the link down below, and we'll see you on the next video.
Thank you.